Well, let's go back to a very topical issue in Nigeria, still trending at this time, is the changes that the CBN has been dishing out in the last couple of days. Well, the bank eased rules on international money transfers, taking another step in freeing up its volatile foreign exchange market to attract billions of dollars being sent home by citizens living abroad. International money transfer operators, also known as IMTOs, can now quote the Naira exchange rate against the dollar based on prevailing market rates at the Nigerian foreign exchange market on a willing seller and willing buyer basis. But we know that a major party to this conversation will be the Bureau de Change. Yesterday, we saw that the Abuja chapter down-tooled. They refused to open in protest of the scarcity of dollar and all of that. Let's get their perspective more now. As we are being joined by the president of Association of Bureau de Change of Nigeria, Mr. Aminu Gwadabe, joins us virtually from Abuja. Mr. Gwadabe, good afternoon. Well, I hope we can have Mr. Gwadabe, as we know that change that was given to make FX rates flexible by the IMTOs came just 24 hours since the central bank ordered banks to limit their foreign exchange exposure. We discussed that yesterday on the program. And we also saw reaction by the market yesterday. We saw that in the parallel market, actually, the Naira gained value, but not in the official market. I mean, a lot of things to understand there. Now we see that the Naira is trading lower in the official market compared to the parallel market, which used to be the other way. But I guess it's just the early days of the policies that the central bank has been giving out. And as we see the different parties trying to adjust to accommodate the changes that come with it. Let's have Mr. Gwadabe now. Good afternoon, Mr. Gwadabe.
Good afternoon, madam, and thank you for having me. Good afternoon, Nigerians.
Great, good to have you. So, the latest of the changes we're seeing in the FX space is that IMTOs can now, use prevailing market rates for transactions. How does that affect the BDCs? Or first, let's start from yesterday. The Abuja chapter of the BDCs say they down-tooled, they did not open, saying that because there was scarcity and all of that. But, I mean, what do you hope to achieve? You are in Abuja. What's the aim? Did you get it? Are you back in business?
First, I want to put a caveat that position is not the position of the central organ of the association. It is a position of the Zone 4 Traders Association. However, that was made as a result of, frustration, agitation. But as a licensed operator and also regulated by the Central Bank of Nigeria, we have channels of communication with the Central Bank of Nigeria, with security agencies. There are a lot of commitment. So it will be the least option that the association can take to shut their own offices. We, however, disassociated ourselves from that, and I'm happy, even those that have taken that decision, they have resumed to business today. Because there is no way you can help in the system when you are even outside the system. So we have intervened, and everybody have resumed back to business.
Okay, then, so the other part now, the flexible price or rates for the IMTOs, how does that affect you? How do you see it affecting supply, which is our major challenge?
It's all towards achieving the new policy thrust of the government, which is the unification of the exchange rate. So, and that in achieving that, we must have a backbone to support that policy thrust. And one of the backbone is the liquidity in that market. We have made mistake when we first announced the policy without having to understand the different sources, their volumes and their frequencies into our market. However, now that we have discovered, it's a good news to start seeing policies that will ensure that the market is robust, is transparent, and is accountable. It was also done to remove some malpractices. At least it's a vindication that there is some white-collar criminality in terms of even ownership, in terms of regulation, in terms of operation of the I&E window. So in summary, I see those surplus, the cap on IMTSO exchange rate, then the net open position of banks in a way to ensuring competition. Number one, we begin to see competition between the inflows from IMTSO and then the cash deposit in the bank vault. And that is expected to usher in Naira stability. Two, it also means that the I&E window is at the point of cancellation or abolition it totally. Because for you to achieve market forces, in that situation, whatever vehicle we are using or the mechanism, like the I&E window, it has to be separate from ownership. Those people that are owning it should be separate from those people that are operating in the market. So liberalizing that means that is like a willing buyer and willing seller, no any external influences that should determine what is the price discovery of that market. So for us, is a welcome development because, for instance, even on the IMTSO window, because of this liberalization, we expect about $800 million in the first 1 week to 2 weeks, if it is fully implemented, that will come into the market. This apart from the already speculated $5 billion that is within the banking vault. So put this together is going to drive liquidity. And all along, part of the problem or challenges we are having as we read the change to access all this window is liquidity. Ab initio, they have been diverted to the parallel market. So now that is being liberalized, the IMTS should be expected to bring in these inflows into the official window. It is also expected that regulatory authorities will now use windows. One is utilization. If the money comes, who do you give to ensure that it's proper utilization of this money? The BDCs over time have proved to be the most effective transmission mechanism of central bank in terms of achieving the exchange rate stability, also in terms of demand measures, in ensuring tracking of demand measures. The BDC can do that through the satisfying of the invisible transactions of travelers, invisible transaction of school fees, invisible transaction of medical fees, invisible transaction of mortgages and subscription payment. In other climes like the UK, the role or the operation of invisible transaction, like school fees, like medical, is done by the Bureau de Change. Even to some extent, post office are doing that. So this is the time to have a paradigm shift. We have seen the implication of suspending Bureau de Change. In July 2021, when the Bureau de Change are suspected from the market, that's one of the beginning of the major lacuna that we are seeing today, because it has driven out the liquidity in the market, because the BDC remain gamen in ensuring the transmission mechanism of the central bank policy. It's just like there's an increase in interest rate. The central bank will now use the deposit money banks to ensure that policy is being transmitted. The banks are used as the mechanism to transmit that policy trust. Something, if you want to achieve exchange rate appreciation, the BDC remain the most effective in transmitting that policy trust of the central bank. Like I've said, when we are suspended in 2021, by then the exchange rate was about 450, 500. In 2 years now, we are talking of deviation of over 200%. Plus that, from that 500 Naira to a dollar to about 1,500 Naira to a dollar as we speak. So, however, there are some certain impact that the policy have started generating. At least we have seen dollar appreciating with almost about 6% to 7% from 1,530 before the announcement of the policy to 1,430 after the announcement of the policy, just after 48 hours in a stick. So we expect further positive in the market. We expect further positive impact in the market. We are also calling on both regulatory and fiscal authorities not to go and sleep, to continue to intensify. And how do they intensify? And this is how I said, how do they inject that liquidity into the market? You can only inject that liquidity to the retail and through the bureau de change. So according to them, this role of our third leg, because if I'm talking about FX market, you talk about central bank being the first line, you talk of the money deposit banks, the next leg you talk is the bureau de change. So that concept of even the IIE window of liberalization, because it's painful. What we're seeing now, most of our businesses are being, for instance, given to IIE window, to IMTSO. We have liberalized their rate, and then yet the BDC is not included into the scheme, into the framework of the market. So its government is important, it's an immediate recommendation so that the retail market can be liquid and the price will continue to fall.
So how do you, from where now do you see the BDCs getting injected into the equation at this time with the scenario that we have?
Thank you very much. It's not the first time. In 2016-17, we had a recession. Even the CBN reserve buffers is not strong enough to support the BDC window. And the then management, with the collaboration of the Bureau de Change and the IMTSO, come up with a framework whereby the IMTSO can be inflowing this money to the Central Bank of Nigeria and the Central Bank of Nigeria. We started with the banks. However, because of some challenges and also some operational difficulties, the BDC were not accessing this money. That was the first directive by the Central Bank. Hey guys, this inflow that is coming from you, from the IMTSO to your own deposit, use it to be selling to the BDC at the liberalized rate of around 250 then also. And it started working, but operational challenges come to mind. That's when even the Central Bank have to take it over from the banks. Any amount you receive, remit to us, and based on that, we allocate to BDC, and BDC will begin to assess that proceed and then inject it into the street and bring down the rate. So it's not a new thing, it's not a rocket science. The framework idea is only to revisit those framework and ensure there's implementation.
All right, thank you so much, Mr. Aminu Gwadabe, for those recommendations that you have given. What we all want is to increase liquidity and get the real value of the Naira, at least one that will increase our purchasing power. Thank you so much, Mr. Gwadabe, the President of Association of Bureau de Change of Nigeria.